hundreds of mortgage deals have been taken off the market in the last week as lenders expect the Bank of England to raise interest rates. It comes after data last week showed inflation isn't falling as fast as expected. I'm joined now by mortgage broker Riz Malik, Director of R3 Mortgages. Riz, hi, thanks a lot for talking to us. So why have they done this exactly?
Hi, Kimberly. It's been a very interesting few days in the mortgage market. Just before the bank holiday weekend, we had some lenders give us notice that they were going to be repricing their deals, and that trend continued yesterday with even more lenders telling us that they're withdrawing their mortgage products from the market. The reason, as you just mentioned, a lot of them are anticipating that there will be higher rates in the future. And also with the recent spike in rates in the money markets, their expectation is that mortgage rates need to go up. So what they've been doing is they've been withdrawing their products and notifying us and telling us that they're repricing, usually at very short notice. So we could get an email, let's say at 2 or 3 o'clock, saying you've got until 5 o'clock to get your mortgage applications in at the current rate, or you're going to be subject to the new pricing. And the trend seems to be upwards at the moment.
So what's been happening for people who are halfway through an application for a certain mortgage and then you get an email like that?
If you've made an application to a lender and the application has been submitted, then these changes shouldn't affect you. It's those people who are going to be fitting into the tranche between between June and December, who are going to come up to face mortgage renewals. They're the ones who might be finding that the mortgage rates are slightly higher than they have been potentially earlier this year. And that's a slight cause of concern, considering that at the moment when we're talking to people about their mortgage deals, we're having to tell them that on average, their payments are going up by £200 to £300 per month. So it's not looking great going into the next couple of months if this volatility continues.
No, that's a lot of money, isn't it? Are you seeing less people even thinking about buying a house now?
Purchase transactions are a fraction of what they were this time last year. The main market is being predominantly driven by people having to refinance deals that have been coming to an end. So that's what's keeping a lot of the brokers busy, where the purchase market itself has been impacted by people waiting to see what's happening with mortgage rates before they make any long-term decisions.
And so what's happening with those people?
Which people, sorry?
The people who are remortgaging, getting a new deal on a mortgage they already have.
So the ones who are remortgaging, we're encouraging people to look at their deals sooner rather than later, and ideally 6 months in advance. If the deals, if we can negotiate or arrange a deal now, and let's say your mortgage is due to renew before the end of the year, if circumstances do improve, then we can always review that thereafter. But as the recent inflation data showed, there is no direct correlation between inflation coming down and the rates that people will pay for their mortgages. It's quite concerning that even with an inflation drop as great as it was, I, for one, thought that was a nice move in the right direction that we need to be. The result that's actually been seen in the market is actually resulting in rates increasing. And the problem is that rates are being withdrawn, and they're being withdrawn with very little notice. So we are asking for more and more lenders to sign up to a pledge similar to Coventry Building Society, that they give us 48 hours notice before they pull any deals or products, so consumers have time to get their ducks in a row, so to speak, and make any necessary applications.
How long do you think this upward trend is going to continue?
I'm slightly concerned, because if the decrease in inflation that we have doesn't meet the parameters that some people are expecting, we keep on having this hike up in rates. So At what percentage do we need a fall of inflation for it to trigger some good news? There is no correlation at the moment, and that's what I find concerning. And that's why I'm one of the people who's backing government-led review into the mortgage market, especially with regards to pricing at the moment, to see exactly what can be done to improve the outcomes for consumers, which we're all obviously 100% behind.
Okay, Riz, I don't think you're the only one who's concerned. Thank you so much for talking to us.
It's been a pleasure. Thank you.